Well, welcome everybody. Steven Sitkowski here, and this is my Market Insights. So happy to have all of you with me. Hope you had a fantastic Mother's Day weekend. Happy Mother's Day to all the moms out there. And the market's giving you a fairly nice Mother's Day gift, assuming that you're in it, that you are a participant, right? It's amazing how that works. Got to be a participant to win. Doesn't really matter what we're talking about. It is May the 11th. Quick reminder, everything we do here is for educational purposes only. It is not intended as investment advice. So, what is moving the markets? Well, Iran's latest offer was called totally unacceptable by President Trump. Iran then countered with the U.S. will not bully us. Trump said that the ceasefire is on life support. I'm not sure that the ceasefire has ever really been honored, has it? I mean, it seems like we called for a ceasefire and that same day somebody violated it, but it doesn't look like anything is getting closer to being resolved. The S&P, in spite of, has hit another record high. So this is all being driven by earnings at the moment. Micron Technology, NVIDIA, two companies that I own, along with some other chip makers, are higher today. That's kind of nice. NVIDIA, I called it after the big earnings beat, and then their stock fell, and it fell like 20% on one of the greatest earnings announcements in history. Hope you got in on it. 10-year Treasury is higher at 4.398%. And why is the Treasury higher? Because oil prices are higher, right? Higher oil prices, higher cost of living, higher interest rates. They kind of go together. So that's just generally what's moving the markets. Market breadth last week. So you can see advancers versus decliners. New York Stock Exchange on the left-hand side, NASDAQ right-hand side. So we had 1554 stocks higher on the NYSE, 1251 lower. The more significant number to me, companies hitting their 52-week highs versus companies hitting their 52-week lows. It was almost, well, it was, yeah, real close to 3 to 1 on the New York Stock Exchange. On the NASDAQ, still very impressive, 854 to 357. And you look at advancers versus decliners, that's market breadth. Um, very strong for the week. That's how you end up with all these new highs. And the winners for the week, Akamai up 26%, SanDisk 16%, Micron Technology 15%, Intel, I own Intel up 14%, and so forth. I see AMD down there at 11%, Moderna, right? Moderna loves those viruses. They come up with the vaccines. And I guess we've got a couple of them that are now circulating. Last week's heat map, um, kind of a blend of red and green, a bit of a mixed bag, but the bright colors are the big movers. So the financials, they took it on the chin last week. Healthcare did not fare any better. But over here, big tech, did great. The semis on the week were rocking. Not so much Nvidia. Nvidia was pretty flat on the week. But Broadcom up over 4%, Micron up 15%, AMD 11, Qualcomm 9, Intel double digits, Tesla was up 4%. So not a bad week. earnings analysis. So S&P 500 earnings above, in line, below estimates. So above would be in green. And the big winner, technology, right? Now remember, earnings are the mother's milk of the market. So the fact that tech went up on their earnings, well, their stock went up as well. Healthcare, although healthcare hasn't done anything, healthcare, I think, is stuck due to that whole AI disruption. They think that AI is going to be able to replace a lot of what healthcare does. We'll see. Staples, pretty good. And then it kind of moves down. You look at the green and it goes down from there. But, none of them were problematic. I mean, even communication services, 75% beat. So no complaints there. It's why the stock market is up. Now, this is what's interesting because we're starting to, this is very predictable, starting to hear rumblings are the prices too high now? Well, here's a year-to-date change in the S&P 500. So down here you have the price. This is the consensus forward 12 months earnings per share and the PE ratio. So the price has gone up 8%, but the earnings forecast 13%, which has driven the PE down 4%. So even after this big move, stocks look pretty reasonably priced. Comparing the numbers, so what's expensive? Now, this doesn't include, by the way, the earnings growth rate. If we had that, then we'd have the PEG. But the NASDAQ 100 is trading at 26 times forward PEs. The Russell 2000, which has made a big move, is trading at 25 times. So that's starting to get a little pricey. But the Russell 2000 stocks are expected to really grow earnings. The S&P, even though it's at a record high, the PE is 21. That's not bad. Equal weight S&P, that's where you treat all the companies as if they were at the same valuation 16 times and mid cap 16 times. So are we too expensive? No. Do I think we're probably going to be seeing some profit taking coming up? I do, but it's not because of valuations. It might be because of seasonality. So on this latest 4-year cycle, you can see, this is kind of the time. There's May and June where stocks for the last 4 years have moved down a little bit. So look at October. October scares the hell out of all of us. So, might we get some pullback? I think that is reasonable, especially after all the earnings are done. Active versus passive. This is assets under management. This surprised me. So 59% of the money that's under management is being passively managed. So what are people paying for? I suspect that a lot of this passive investing probably has a great deal to do with ETFs that have, for the most part, fixed portfolios. Plenty of dry powder out there. We have $7.7 trillion sitting in money markets. This does not include CDs. So you can see about 3 trillion of it is retail. The balance, the bigger piece, are institutions. So, I mean, there's money on the sidelines, which will probably migrate into stocks. Market sentiment, Well, for the last couple of weeks has been pretty much the same. So when you look at the bullish component, so they ask independent investors, what's the market going to do over the next 6 months? Um, you can see that we haven't had much change here recently. Um, on the 29th of April, 38.1% bullish. Last week, 38.3% bullish. Where we have seen a difference is in bearishness. We've gone down from almost 40% bearish down to 33% bearish. So the sentiment is definitely improved as people watch the market go up. Fear greed index still in the greed category. That's where it was a week ago, a month ago. We're in the fear category. So a whole lot has changed in the last month. Future of interest rates, well, let's just say that at the moment, we do not see any rate cuts. Even going now out to December of 2027, there's a 41% chance of no change and then a 40% chance of a rate increase. So, yeah, we can't count on the Fed for any help. We're going to have to count on what? On earnings, which is what we should be counting on anyway. So this is sector performance. The S&P 500 is now up about 8.5% year to date. I said we'd get double digit this year, and it certainly looks like that's going to come to pass. We have been led, of course, by energy for obvious reasons, but look at tech. It was not that long ago when tech was down here. And now, because of strong earnings, it's up 16%. Materials and industrials are benefiting from AI data centers, and then it kind of moves down from there. Healthcare, boy, is still way behind. They're down 7.61%. So healthcare is trailing the S&P 500 by 15%, and financials are not much better. Those are the only two sectors that are down on the year. This week's earnings. I don't know that there's anything on this list that realistically is going to move the market. It'll be interesting to see D-Wave and Oklo because of their association with AI. So that could be somewhat telling. That happens on Tuesday. Other than that, do I see anything that's going to move the market? I do not. Yeah, I do not. News of the week. We got a big news week. All right, let's talk about what we need to be looking at. So on Tuesday, we're going to get the Small Business Optimism Index. That's not really a market mover, but it's something I always look at. How does small business feel about the economy? There we got inflation data coming out. Consumer Price Index, CPI year over year. So we have month over month, year over year, core CPI. So that's where we take out energy prices. We're expecting that to grow at 0.3%, and then year over year, 2.7%. We can't really afford a miss to the upside. I think that would spook the market some. Then we have on Wednesday, producer price index. That is inflation at the wholesale level. Expected to go up 0.6%, but the core up 0.3%. Annualized, that's 3.6%. Too high, but will that move the market? No, if it comes in under expectations, we'll be fine. Thursday, we get retail sales number. Is the consumer still out there spending money? I think you're going to find that they are. Initial jobless claims came in at 200,000 last week. It's anticipated to come in at 205,000 this week. And that's probably the big stuff that you need to keep an eye on to be fully appraised of what's going on. All right, let's take a look at the charts. We're going to start with the S&P 500. There you are. So you can see ever since the ceasefire that didn't take, the market's just basically screamed higher. We are getting quite a ways away from that 50-day moving average. And anytime I see that, I always anticipate a pullback. Let's see what the RSI, yeah, this is the relative strength index. When it's above 70, it's considered overbought, and it is above 70 at this point. It's at almost 80. So you'll see a sell-off. Doesn't mean the market's gonna crash or anything, but we're gonna get a 5 to 10% pullback at some time. I don't know if it's tomorrow, a week from now, a month from now, but it'll happen. And I would suspect after that, this market will continue to march higher. And what does the VIX look like? So this is volatility index on the S&P. This is kind of interesting. The market is up today. Generally, when the market goes up, the VIX goes down, but it's not. The VIX is actually higher on the day. I mean, it's fine at 18. This will generally trade between 13 and 25. Um, anytime it's under 20, there's a general sense of calm in the marketplace, and it is by a pretty significant margin. So, all right, everything's looking pretty darn good at the moment. Let's hope it stays that way. Thanks for watching. I'll be doing the same for you next week. Till then, be safe, be blessed. Bye for now.